Hello everyone, this is the theory part of the income from other sources, the last head of income. So first of all, you have to know that any income which does not fall under the head income from salary, income from house property, profits and gains of business or profession, or capital gain will be taxable under the head income from other sources. So there are two types of income covered under this head. The first one is general income under section 56(1) and the specific income under section 56(2). So now let us look at the various general income. So the first one is income derived by a coal mine owner from rent and royalties are included in this head. Then income earned by an assessee from licenses granted to brick makers to erect brick links upon his land and to take away the brick earth and use it for making bricks. Then the third one, we have remuneration received merely for being a director and not as employees is not salary but income from other sources. Then income received by an assessee from a person other than his employer, example university remuneration. Then interest on loans, securities, deposit and current accounts also come under this head. Then income received by a professional man as a university examiner, then income received on subletting of the house, then tips received by a waiter or taxi driver not being given by his employer, then family pension received by legal hires of employee, then income from undisclosed sources, that is deemed income covered under section 68, 69, 69A, 69B, 69C and 69D. Then income of other person to be included in the income of individual, then income from writing articles by a non-journalist, then any withdrawal from national savings schemes upon up to an amount on which deduction under section 80 CCA has not been claimed, then income from agricultural land situated outside India, remuneration for lectures delivered outside India, then agency commission received by an agent of life insurance corporation, postal savings, then unit trust of India or other mutual fund if it's not his regular business, then income received by a director for standing as guarantor, then commission received by a director for underwriting the shares of a new company, then gratuity received by a non-employee director, then any annuity or pension received from LIC or other insurers under section 80 CCC. So now let us move on to the specific income. So under section 56(2), the following income shall be chargeable under the head income from other sources. So these are the specific income. So the first one is dividend. The second one is income from winnings from lotteries, crossword puzzle, races including horse races, card games, or any other games, gambling or betting, etc. Then any sum received by the assessee from his employer as contribution to any provident fund or superannuation fund or any fund set up under Employee Insurance Act 1948 or any other fund for the welfare of the employees provided it is not chargeable under the head profit and gains of business or profession. Then number 4 says income by way of interest and security if not chargeable under profit and gains of business or profession. Number 5, income from machinery, plant or furniture belonging to the assessee or has been let out and it is the income is not chargeable to income under the head business or profession. Then where an assessee lets out on hire machinery, plant or furniture belonging to him and also building, and the letting of the building is inseparable from the letting of the said machinery, plant or furniture, the income from such letting if not chargeable to income tax under the head business is chargeable under the head income from other sources. Then any sum received under key man insurance policy including bonus allocated on the policy, if such income is not taxable under the head salary or profits and gain of business or profession, then any sum of money the aggregate value of which exceed rupees 50,000 is received without consideration or property both movable and immovable is received without consideration on property is received for an inadequate consideration by any person on or after 1/4/2017 if the amount of such gift or inadequate consideration exceed rupees 50,000, then after subtracting consideration from stamp duty value, the balance amount shall be taxable income. Then where a closely held company received in any previous year for any resident person any consideration for issue of shares in excess of face value of shares, then aggregate consideration received for such shares over fair market value shall be taxable. However, this income is subject to certain exception. Then point number 10 says that interest income received on compensation or enhanced compensation 50% is taxable shall be taxed in the year of its receipt. Then forfeiture of advance received for transfer of capital asset is taxed under this head. then any renewal or capital nature compensation received is or receivable in connection with termination or modification in the employment contract is taxable under this head. So these are the specific income taxable under the head income from other sources.